Huge news. Starbucks. New CEO. This was telegraphed. I mean, God, I should have been buying. I said it, yesterday that the service on my birthday was so good. What wasn't good was the 80 grams of added sugar in Starbucks. But we can go over that later. Let's do some scans. Because inflation data is coming. Producer price index, PPI data. Hey, Chase. Good morning. I'm going to turn on Do Not Disturb. Markets are soaring. Let's go to Seeking Alpha. Markets took off. Wow. Wow. Producer price index. How much it costs to produce goods. Up 0.1% year over year versus expectation of 0.2%. Good news is good news. Market flew. Bonds down. Weakening consumer. Lower costs. Reduce prices. And if the Fed cuts rates, hopefully spurs growth. Morning, Chris. Oh, yeah. There will be a TikTok challenge on that one. First, Cyber Dan. Let's see. Did the CPI data come in? Let's see. They haven't posted their stuff yet. Market data. Morning. Okay, let me log in. Oh, over here so I can see the chat window. View channel. And I still don't get it, damn. I have noticed that it doesn't start me out live when I go on here for some reason. I don't know what to think about this dude who, I mean, he was producer less than expected. We'll put this in. That's the huge news of the day. That's good. Let's do some scans. Okay. Scan and SMCI. Whoop, whoop. XLY that I just got out of. Brokerage holdings. XLY SMCI. Bitcoin. Let's see. Anything in Bitcoin? Crypto. BITS. BITC. BITX. ARLP. BTF. Morning, Mike. HODL. BITB. BTOP. AETH. ETH. FBTC. That's the Fidelity one. BTCL. Beth and IBIT. I will be adding more IBIT. Covered call ETFs. There's probably one or two, yeah. RYLD. We're just going to put that in there because there's only one. Energy names. CHRD. HRD. HAL. CVX. SLB. Levered ETFs. Yes. Yes. TSLR, TSL, BITX, BTCL, TSLL, Coin Long, FAS, UDAO. Let's see. Low cost Vanguard. There's probably a couple. Yep. Low cost ETFs. RSP, which is equal weighted, finally gets a bid up. VIG, which is growth. VBK. VYM. Spider sectors. Oh, we've got three. XLF, XLV, XLY. I will be adding to XLK once that one. And we're probably going to have a ton on the watch list because it was a good day. It's hot in here too. RNA, MOD, ETHE, URI, Sentinel, Target, Team Coin, Toast, which I just talked to a buddy about yesterday. Morning, Andres. Watch. And then we're going to go to the Dow. CVX, Intel, AXP, American Express, just such a good stock. I mean, such a good one. Let's go to the NASDAQ. If inflation was sticky, we'd be screwed. But inflation seems to be. I mean, this, to me, let's see if there's anything on here. I mean, does anything stick out here? Oh, the big NVIDIA. Interesting. CTOS, GFS, Intel Team, SMCI, Tesla. We got Tesla, yeah. Index, and then S&P 100. We're going to have all those names in there again. Top of the morning to you. I am Irish. I was watching this Love Off the Grid, which is an HBO Max show. And this dude with a big beard, Morgan Stanley, which I sold, met Citigroup, AIG, and BK. Not Burger King, but the Bank of New York. Okay, strategy tester. Let's go to 4 hour. Oh, and we'll go to the Qs, which is up 1%. Roblox up 2%. Okay, hold on one sec. I'll be right back. Okay. I think I may head right into this, though. I've got... Let's make sure Trendspider didn't update their pricing for the inflation perspective. No. They got a big update coming. We're at 455. Morning, Mark. Remove this segment. Yes. Let's see. Okay. I'm going to get started here. Because I got the friend code discount, I got AT&T, I got the newsletter. What you looking for? Do you want me to call you? You do? You don't have to. Okay, you found it? Okay, we're going to get started with some... You know what? I do want to pull up Earnings Hub. Hey, why didn't I pull up Earnings Hub? This should be... Okay, what do we have? We have on earnings, so I probably should look at that. They're up 3%. I think that's a social, yeah. That's fine. Yeah, that's fine. Home Depot earnings. New core, new holdings. Mercy. Where the hell is Walmart? Bye. I thought Walmart's tomorrow. Popular. Walmart. Two days. I don't. Oh, there it is. Okay, I am seeing it. And Berkshire. Okay, let me see. Earnings. Thursday is Grab, Deere, Baba, and Walmart. Friday is Applied Materials. BRK.B. Okay. Yeah, I mean, 9 cents, 9 cents. Their expected increased revenue, strong customer growth, customer base exceeded expectations. Morning, David. I mean, I don't know. Nothing here kind of speaks out to me that, oh my God, we've got to play it. Applied Materials. This one's interesting because it's reduced EPS, increased revenue, and they blew it away. Bob is an interesting one because, I mean, nobody expects this, but their expectations are super high. Walmart's an interesting one because I just think they're going to come out just like Home Depot and say the consumer's a little weak. Deere has been beaten down a little bit. I think Deere has been beaten down. Let me look at that chart. Yeah. But it's not, it's in the bottom of that trading range. So I don't think I'm going to go into it per se in the podcast, but we'll open up some links. We got Cisco. We've got semiconductors in October. We've got Google Event. We've got Google Gemini says ChatGPT-4 is the most advanced large language model, which is interesting. Celestica, that I always call Celsius. We got Palantir, which went under 30 yesterday. I think it provides an opportunity. Dell is in the spotlight. Biggest movers of the day. And I love this. We got an email from Seeking Alpha this morning. I love the graphics that it gives me. Producer price index we'll go over. Home Depot on their earnings, just a shit show of demand. We've got yeah, I agree with you, Chris. I think Deere is, this is interesting. SPY, the last 20 years, SPY daily RSI has hit oversold levels 30 or more 29 times. Using that, let me see. They don't have it. Okay. Win rate is 73%. Total return 54. So that's huge. Is this the same tweet? We Consumer dominates the discussion. Expedia CEO on Q2 performance. And then this is more Alexander. Morning, Steph. No, I think, Dan Niles yesterday, the VIX dipped below 20 and then came back over 20. This is the point. Rate cuts late in a good economy are bullish. Rate cuts due to a slowing economy are historically bearish. This is the big news of the day. Starbucks is up. It was up 14%. It's up 13%. So it's recovered. Any reaction in the market is an overreaction. So we'll go over that. I don't know why these red things are there. Let's see. Did they enact something that I don't exactly know what it is, or is that just... Nah, that's just a mess up on their thing. Is that one of those income ETFs? SPRI? Oh, it's a pharmaceuticals. Looks great. I mean, that stock you can't argue. But I'm not a pharmaceuticals guy. I mean, nothing I can tell you is going to, say, hey, Baidu's, you know what? I'm going to bring this up. Because I do think this could be a good one. Let's put it. Let's do this here. Okay. Baidu. They could be Apple's China partner for their Apple Intelligence, which would probably pop that stock. Baba, don't get sucked in. Steph, I'm telling you, Baba. Okay, this is going to be right before earnings, which is going to be... open that up. And we're going to put this right after NVIDIA ARM. Nope. I think semiconductors. There we go. Okay. I like that one. It fits in there. C Limited gave good earnings, but lifted by good consumer growth. Okay, I'm going to hit record now. Good morning. It is Tuesday, August 13th. It's not Friday the 13th, August 13th. So big news in the market. We're going to go over everything. New Starbucks CEO, the VIX. We'll look at that. PPI, which is Producer Price Index. Good news is good news. It came in lower, so the cost of goods is actually costing you less. We'll go over some of the upgrades in QQQ, XLK, FBCG, some of the core portfolios, Celestica, CLS, Google, Microsoft. We'll go over NVIDIA and the chips, when they could come. Cisco earnings, they could be interesting, and Thursday and Friday earnings as well, and then some social requests. So got a big show. Big show. First off, thank you for listening. I really appreciate everybody's kind words and nice things they say. If you ever want to get in contact with me, all you have to do, sign up for the newsletter. It's free. It's free. I post it during the week. That's free. The weekends it's paid, but sign up for the newsletter, and you can literally just reply to that email. Literally just reply to that email, and you can get in touch with me. So if you have a question about a stock, you want my opinion on stuff. Again, this is all entertainment. It's not financial advice, but if you want an opinion, go ahead. here's the thing about the markets. And there was a question about, what does this data mean? Can you explain it? A monkey could tell you whether a stock is going higher or lower and have a 50% chance of being right. That's the market. So don't overwhelm yourself with too much data. When you get into a situation and you have stocks and you're not sure of the direction, take emotions out of it. And the charts will tell you where the price is going. The charts and the moving averages and the MACD and the RSI, all of these indicators will tell you where the stock is likely going in the short term. Then you move to the long term, which is the 200-day moving average. And where are we in the Qs? Well, if you look at a long-term chart on the weekly, the Qs, I said that 450 is a super kind of resistance level. It's a support and resistance. We're at 455 this morning. Okay, here's the Qs weekly. Where do you want to know where it's going long term? Well, look at the weekly. The 200 days moving up. The medium term, the 50-day, still moving up. The 9 and the 21 kind of pulled back a little bit. Does that mean the end of a bull rally? No. But the indicators, the MACD, it's crossed down. So you might have some weakness. Again, we are waiting for data from the consumer and inflation this week. That's going to determine the price of the stock. You can use all of these indicators, but I'm telling you, the way to help yourself sleep at night if you're nervous, excuse me one moment. Patty, I love you, but stop. The way to let yourself sleep at night is to take emotion out of the game, and you can do that with charts. Trendspider is your friend. I get you started. My 4-hour algorithm, it's back-tested and proven. You can take a look at it, and you can back-test it yourself. But if you sign up with Trendspider, you can probably help yourself sleep at night, even with some risk on the table. You go over to Linktree, linktr.ee/daily stock pick. Right here, it's the top one, Trendspider. You sign up. It's just about $50 a month, $53.50. Okay, it's a big investment, but I'm telling you, the dollar amount that you're spending, you have to have a large enough portfolio. Do not think that you've got $2,000 in the bank and I'm going to spend $642 on Trendspider and all of a sudden I'm going to make money. Past performance doesn't predict the future. It just helps you understand where the price is going because charts don't lie. They have no emotions. There is nothing in these charts that tells you, oh my God, I think it's going up. There's no emotion here. It has gone down. We've pulled back. Does it make you feel comfortable? If it gives you some agita, then you've got to have a chart. So make sure you have the tools in place to do this. And again, once you sign up, once you go to that Linktree and you sign up for Trendspider, just go up here to the upper right and email me. Even just respond, hey, I signed up for Trendspider, and send me a screenshot of your sign up, your account. I need to know your account. You need to be on my program in order to get this stuff. All of the updates on the watch list and everything. You need to be on my program to get that. So we have to sync you up through Trendspider. That's why I asked for an account thing, an account screenshot. So the Qs, we're over 450 again. The Qs right now are at 455. We got some good news. We'll go over that. But the biggest news of the day, StarBucks CEO, Laxman, I think that's his name, Laxman Narasimhan. I think that, and my apologies if I'm saying his name wrong, but he's been replaced by the CEO of Chipotle. Okay, how did the stocks respond? Starbucks up 15% on the news. Chipotle down 10% on the news. It's huge. This is an example how good management plays into a stock's position. And do you want to get into Starbucks right now? Well, I said on Saturday, my experience was so good with their app. I said, you got to get into this. I will tell you, I think Starbucks is a $100 stock. Right now in pre-market, Starbucks is trading at $88. Okay, it's up 14.24%. $88. I should have done that. You've got a gap here between 82 and 88. It filled the gap. I mean, all it did was fill the gap. And all we had to do was wait for the algorithm to tell us, buy here at 75. I should have bought last week. I should have bought yesterday because the experience was so good on Saturday with the app that I think it's, again, weak consumer, I was scared. new management that has shown you he can take a damn $15, $16 burrito and continue to grow and expand, that's the management you want in place. So I do think they made a change. There were a bunch of activist investors. It's not where you want to be. You want to wait for this one to shake out, and he takes over immediately. So I wouldn't jump into this one right now. Wait for a few days. But I will tell you, this range that you've seen right here from 2022 to 2024, that range is coming back. What's the bottom of the range? It's 90. So if you are spending $5 on a coffee today at Starbucks, get the stock. Yeah, it's overbought, but just get the stock, because I do think that this guy has the reins and he will take it and he will grow it. Okay? It's all about experience. And that's the thing. The Starbucks is not just a coffee company, and it's an experience company. And I talked about it yesterday, how I think that Chick-fil-A has the absolute best experience for their customers. You can't buy stock in Chick-fil-A. It's a private company. But Starbucks, you can buy it. Now, let's talk about some things. This is from Steve Burns, and this points it out exactly. Rate cuts late in a good economy are bullish. Rate cuts due to a slowing economy are historically bearish. You have to make the determination about where this economy is right now and whether you want to invest in the economy or whether you think that we're going into a recession. This is the point where you take, okay? We got the producer price index. We'll go over that one. But this is the divergence in the road. There's a fork, okay? If you're a bear, go and get 2-year treasury bills at 4%. That is a fantastic rate, okay? Don't do it in your retirement account because you don't pay taxes on your retirement account. You want to get actual bonds in your retirement account that are paying a little bit more because you don't pay taxes in those. But if you've got treasury money, brokerage money, like I do, I sold a bunch of my brokerage. I tax loss harvested. I've got a ton of money. So what am I doing with that? Well, I'm going to wait for the inflation data to come in because if rate cuts are coming in September, I want to make sure, is it a good economy or is this a slowing economy? Because right now that's up in the air. And if it's a slowing economy, I'm going to buy treasury bills because 4% tax-free, sign me up, okay? If I can save 4% in a downward trending market, sign me up because I'm going to make 4% on those treasury bills. And all I have to do is keep them. They're going to pay me 4%. And the Fed's going to lower rates? Yeah, you ain't going to get 4% as the Fed starts to lower rates. If this is a rate cut into a good economy, hell no, I don't want 4%. I want my 10%. I want my 12%. I want my 26%. I want my core portfolio. Okay? That's the difference. And the fork in the road is coming because this week has the decisions. I think NVIDIA at some point in time is a $150 stock. I need to start adding to it. That's the fork in the road that I'm trying to get to. And let's see, the next one here, I think this is it. I don't think it loaded. So I'm waiting for this one to load on my computer, just so you know. Patience. Yeah, this is what I wanted to point out. Patience. I've said it before. The data and price action will guide you. Dan Niles posted this. Well, I posted about a high probability of an oversold bounce following the 3% decline of the S&P on 8.5. I believe it's prudent to get more conservative following the recent rally that has erased all of those losses. Again, yet last week, it's a nothing burger. The last week's Monday stuff, it turned out to be nothing. Just a bounce. We bounced right off of it. And Dan Niles points out, from a longer-term perspective, I still do not believe we get a recession. There are still 10% more job openings than people unemployed. Unemployment is still low. The Fed is expected to cut. So he's saying patience. Patience. And that's what I've been preaching is patience. I don't think that we go straight up from here. We could. We absolutely could. I don't think so. We consumer discussions dominate the earnings season. Expedia, they announced yesterday, we're seeing customers slow down on price and travel. They went down. Weaker demand. Okay? That's it. Now, what did you get this morning? Home Depot falls after pointing to weaker consumer spending trends. Lowe's also lower. Home Depot's down about 0.67%. Since then, the producer price index came out. This was down 4%. Since that PPI came out, which we'll go over, that Lowe's and Home Depot have recovered. Now, the last time in the 20 years, SPY Daily, RSI, has hit oversold levels, 30 or less, only 29 times. Okay? That's 20 years. It's only hit it 29 times. Using this as a long entry, here are the stats. Total return, 54.2%. Win rate, 73%. Okay, average return per position, 1.68%. It's simple. I mean, it's, you know, when the market's oversold and you've got an ETF like VOO, which triggered us an entry in the algorithm yesterday. Okay, when you've got that type of indication that it's oversold, it's okay to add to your position even if we go down, because the long-term winner is going to be your ETFs. So add to it at 490. In pre-market, what are we at in pre-market? 492. That's not too far off. You can still add to it. And again, if we go down for the next few months and you're down, that's not a horrible position to be in. Just keep adding to it. Say you've got $1,000 to add to VOO that you want to add today. Add $200 of it. Okay, a fifth of that position. Just go slowly into it. And again, that's what SPY is telling you. We're oversold. Get into it. Now, the producer price index. This is the cost of goods. It was expected to go up by 0.2% year over year. It's up month over month. It's up 0.1%. Year over year, 2.2% versus 2.6% expected. That's huge, because what does that do? If the cost of goods are coming down, more than likely, producers will actually lower prices. And so if that CPI tomorrow comes in lighter, we'll see another bump. Again, this is good news turning into good news because the market bounced. So the Fed rate cut might be in play, and it might be at 0.25. Now, what did I get this morning? I got an email from Seeking Alpha, and this is the second tool I'm going to tell you. The first one was, we'll go over more charts, Trendspider. But the second tool that I like to use is fundamentals. And fundamentals from Seeking Alpha right here. I get this email every morning. And this is the daily stock pick core portfolios. Yesterday's top gainers were SMCI at 6.33%, NVIDIA at 4%, Dell at 2.94%. Top losers, recent screamer, Simon Property Group down 3%, Cleveland Cliffs, which is down by 13%, and you can trade on the core portfolio, and Boeing. They were all down. But what I want to point out to you, the rating upgrades. And there was a question yesterday about how you set the reminders. Well, you get reminders of upgrades in your portfolio email every morning when you sign up for Seeking Alpha. How do you sign up for Seeking Alpha? You go over to the link tree, linktr.ee/dailystockpick. It's the second one. You save $25 and you get a free 7-day trial. Okay? And you import your portfolio and you get this email every day. And it tells you the ratings upgrades in your portfolio. It will tell you all the ratings downgrades. You can see all of the ratings if you'd like. This portfolio is a fantastic, fantastic tool. I'm probably going to do a video soon about how I'm organizing this stuff, and I'm going to set it up a little bit differently. I'll do it all on. But here it is. Here's your quant rating. And if you want to sort all of this stuff by quant rating, you can. Taiwan Semi is the top in my portfolio. Bank of America is the second. Dell third. MPLX fourth. VOO fifth. VOO has been a great, great buy. Again, the quant is telling you to buy. Now, if you want to set an alert, say you're into Taiwan Semi and you say, well, it's a strong buy now. I want to get an alert as to when it goes down. Well, you go up here to the upper right and you set this alert, and you can do price and ratings, okay? You can do active trigger. You can do a new alert right here, okay? When it goes down, when you go to rating, you can say the quant. And which rating do you want? You can say rating, quant, and you can select the rating. It's right now a strong buy. You want to know when it goes to a buy? Right there. Okay? Save it. And now you're going to get an alert when this one goes down in the quant. That's great. If you want to do it by price, you can do it by price. It's fantastic. It's absolutely fantastic. And again, this is part of Seeking Alpha Premium. You can import your portfolio. I love it. Get a free 7-day trial today. That's what this email is all about. We had 3 of them. QQQ went from a hold to a buy. We got oversold. We hit that 450. Go ahead and buy it. XLK went from a sell to a hold. Okay, we can look at XLK. Remember, XLK is dominated by NVIDIA. And it's the momentum, expenses, A+, dividends, B, risk, C-. When you go and look at XLK, and you look at this, Microsoft is 22%, NVIDIA is 18%. That's 40% within 2 names. Okay, your next biggest one is Apple at 5%. This fits my portfolio and my risk tolerance perfectly. Now, when you look at this, the chart doesn't look great over the last month. Over the last month, you're down 11%. Over the last 5 days, you're up 0.1. Over the last 6 months, you're up 0.51. Year to date, it's up 7%. You go out 1 year, it's up 22%. 5 years, this one's up 167%. Okay, when I can double my money, more than double my money in 5 years, I'm happy holding it. You may not be. But again, that's the thing. Now, FBCG, this is Fidelity's blue chip growth. I have that in the core portfolio as well. So I got those emails. I got that. Biggest stock movers today. We went over at Starbucks. Huge. Rumble, they soared. And Dell. Dell is one that I'm going to go over right here. We can go JetBlue. JetBlue had a nice pop, but they're diluting shareholders. Airlines are trades. Do not hold airlines. They were down 20% yesterday. They're down 5% again today. Dell. Spotlight on Dell at Barclays upgrades the valuation reset. Now, here's the thing. Kept his $97 price target. So he upgraded it, saying that the stock has just been beaten up too much. The stock has earnings coming up. It's later in the month with NVIDIA, but you're seeing this button hook. We had the buy yesterday at $92.20. Where are you today? You're at $99. That's on the upgrade, okay? You had this gap right here. You have a gap up to 107. You're probably going to fill it. You want to go from 99 to 107? You're probably going to fill it. Again, you're probably going to fill it before this. You had this death cross, okay? But you've got confirmation today above that 9-day. The 9-day starting to turn. The 50-day hasn't turned. Where are we on the weekly? We've been pulled back down. Now, the strike line on the MACD is still super high. You know, I got a question yesterday about when this was an IPO back in 2019. Has it been long enough? Yeah, we got the 200-day. The 200-day is still moving positive. You're using the 50-day right now. The 50-day is right at 99. Is that going to be resistance or is it going to turn into support? I don't know. I think the valuation of Dell makes sense here. It's a strong buy in the quant. And we can look at the quant and the factor grades in the quant to see exactly where it is. Quant valuation is a C. That's not horrible. The growth, A. Profitability, A+. Momentum, A-. Revisions, B+. Are they taking it down? One person took their earnings per share down. And so I think this is a great buy. And did we get a buy in the algorithm? Yes, we had a buy yesterday in the algorithm. And you have confirmation above the 9-day with the afternoon candle. Simple. Simple for me to look at that chart and understand it and look at that. Now, Palantir. This is a core portfolio stock as well. Palantir, Q2's another step towards S&P inclusion in September. Will they get included in the S&P in September? Well, I don't know about that. But yesterday we saw it pop to 31. It pulled back. Today you're up 1% because the numbers are good. $30 is, I think, your swing on this one. When it goes over 30, you sell it. When it's under 30, you can buy it. Is $29.66 a good enough price to pick? I think the upside just isn't there. I'd wait for a little bit of a pullback. Now, the algorithm got you in at 27. That's a fantastic price because you've made 10% since August 8th. Last week, you've made 10% in this stock. And that's after earnings. That's after earnings. And the reason was that Microsoft deal. But this is a great analysis. This is a great article. If you want to read it, it's fantastic. It's talking about how they're going to get included in the S&P 500. I think it's a done deal. I think that one's done. Now, another stock that I like, Celestica. Celestica continues to demonstrate strong revenue growth and substantial operating leverage. The company's revenue and EBITDA are unmatched. This is his alpha pick. And if you don't know anything about fundamentals, A, In Seeking Alpha Premium, these quant ratings help you because you can take a look at it and it has full explanations. Again, give it a free 7-day trial. But say you don't know anything about fundamentals and you want just a hand-picked portfolio. That's the third link on this link tree, linktr.ee/daily stock pick, and that's Alpha Picks. And the reason I'm an affiliate with Alpha Picks, I typically hate the texting services and buy at this price and sell at this price. The portfolio is fantastic. It's a long-term buy and hold portfolio. They tell you on the 1st and the 15th when to buy. We've got another pick coming up this week. Okay? That's all they do is they tell you on the 1st and the 15th when to buy. Then they tell you throughout the months or years, whatever it is, they will tell you and email you when to sell. You get a full description of this. And it's a portfolio that is up 114% while the S&P is up 38%. That's the reason I'm an affiliate with it. And it is great. Now, if you like to pick your own stocks, I'd say Seeking Alpha Premium is your bet. If you got money laying around and you want Alpha Picks, again, if you want to beat the S&P, that's the best one. But Palantir, as far as the algorithm goes, the algorithm makes you 80%. Buying and holding makes you 169% over 24.5 months. It's 28 positions, so it's just a little over. Your average win is 18%. This has just been a monster of a stock over the last 2 years. A monster of a stock. That 25 still remains support. But Celestica, I think this one's a good one. We can look at CLS and Trendspider. Again, this is how you use your tools. You go between your tools. You find that analysis that says, hey, they're growing everything. It's a strong buy in the quant. We can look at it. It's a buy yesterday at $47.51. Where are you today? $50. It's after its earnings. Was this just a reaction that's an overreaction? Well, let's go take a look at the weekly. The weekly, you're still a little bit stretched. Not crazy, but you can see the bounce right off of that 50-day. Now, you're typically, during this entire uptrend, it's been the 9-day, and the 9 days at 51. You're at 50. Again, it's an alpha pick, so I would just tell you, long-term buy and hold. It's not crazy valuation. The growth is a C. It's probably levered cash flow, to be honest with you. Let's see exactly what it is. Leverage free cash flow. That's what's hurting it. But they're still growing at 28%. The sector's growing at 23%. Free cash flow forward 21%. Sector's at 17%. I think this one's a good one. So that's one that I've wanted to get into. I need to get into it. Google Gemini says, when you go and you ask these AI models, what's the most advanced large language model? Google's Gemini just said OpenAI's GPT-4 was the biggest one. Whoops. But it's probably getting trained on Google's data and the headlines that come out. So why do you want to buy Google? They're likely to unveil Pixel 9 phone, new watches, and more. That's today. They got a Google event. There's a Google event. Do you want to buy Google? I think so. I mean, Google, in my mind, it's one of my core portfolio. It's my top 5 names. This and Microsoft, OpenAI, and Gemini. But I use both. So I actually have bought both. Now, 161, where are you in pre-market? 165. Is it bouncing up? MACD's super low. RSI's coming off of these levels at 27. Pretty good. You got a gap up here. Now, where are we on the weekly? Again, long term, you want to look at this. We're still going up. Now, you got this support here at 154. So if you buy at 163, set your stop loss at 154. If you go down below there, you can always buy it lower. But again, you want to set these things. Now, let's look at Microsoft because they have the partnership with OpenAI. I just bought a new Xbox, by the way. It's coming from my brother who works for Microsoft because he gets discounts. But 404, you're at 409 pre-market. Now, you got about the death cross. I've said, if you want long-term, I think you can buy between 402 and 430. Is this trending down 50-day? Is that bad? Not great. But look at how it bounced off on the downside there. This is probably going to have a death cross. And then you're going to have to make the determination. Are we in a bull market where the Fed is cutting rates into a good economy? Or are we in a bear market where the economy is weak and that's why the Fed is cutting? So that's the determination. And if you think we're in a bear market, do not buy Microsoft because you'll be able to buy it lower. Now, if your trend, your outlook is like 1-2 years, I think 404, 406 is fine for Microsoft. I think it's fine. But again, nobody knows, to douche on the internet. That's me. This is an article, semiconductors could start recovering in October, Bank of America says. NVIDIA has already recovered. This is NVIDIA, Microsoft ARM. Now, 113, I think this is a $150 stock. Honest to God, I think they will report earnings. Now, as long as they don't report some type of slowdown or some type of, Chinese kind of, they can't sell into China. There's a report out that Huawei actually has a chip that is going to compete with them in China. It's probably not great. Your 50 days moving down. But I think long term, adding at 110, I think you'll hit 150. It's one of those that you just want to buy and hold. Look at the long term. Have we reset? Not really. But this stock barely ever gets down here on the RSI. You can see what happened. These 2 arrows are the last time that the RSI hit 50 or close to 50. So when their earnings come up, again, they're saying semiconductors could recover in October. I don't think you wait. I think if you got no exposure to NVIDIA, I think you get it. Now, if your risk exposure, if your risk tolerance isn't that high, buy an ETF, buy XLK, buy one of the tech ETFs. Just make sure it holds NVIDIA. Have some exposure to it. I do think that one is one that you want. AVGO, Broadcom, they report. I like that one. Their report's coming up soon. I own that one at about 130. When it went way up, we can look at AVGO. Are they saying that it's going to recover in October? Yeah. I think you buy it today on this pullback. That's 144. It's trading at 148. It's at 151 pre-market. Sorry. It's using that 200 day. Now this one isn't trending. The 50 day is not trending down as extremely as NVIDIA. They got their earnings coming up September 5th. So I like it. I like it a lot. Now let's talk about Baidu. Baidu's AI search strategy will bear fruit despite starting later than Google. So Baidu is the Chinese Google. Okay, they're out. They just Bernstein upped them to outperform, but lowered the price target to 130. I think this one's interesting. Again, the price target is 130. We can go and look at this. Now, Wall Street is saying it's a strong buy. And that's because, again, the price target, they're saying it's 130. We'll go and look at the average. The quant saying it's a hold. Their growth has been the problem. China is broken. Look at this stock, upper left to bottom right, just on that chart. We'll go over in Trendspider. The momentum is horrible. But is this one that you want to put $20 into or something? It might be worth starting a very small position in China. Not because this one is going to be the next Google, but because China is one of those, these are one of those stocks that you could get a bounce back to the 200 day. Where's the 200 day? 150. Now, what if Apple says, you know what? Our Apple Intelligence is going to partner with Baidu in China because they have to partner with a Chinese company. That is just part of it. Well, Baidu's going to pop on that one. Now, the valuation's not crazy. The valuation, you've got a PE of 7. Imagine buying Google with a PE of 7. The problem is the growth. And the growth here, when you look at the free cash flow, it's just down. I mean, it's a D+. They haven't grown. When you look at the momentum, this is a stock. Momentum is a strong force, okay? But Wall Street actually thinks, and they haven't chased this one a ton. It's just been going down, but you're seeing that gap there. The price is at, 65%? The average price target is 141. And it's not covered lightly. 37 freaking analysts. Okay, I think this one might be an opportunity for you to look at. Again, you got to be comfortable investing in China. I wouldn't go balls deep on this one. I would go just a little, stick the tip in a little bit. Now, earnings. Cisco remaining bullish despite low expectations for earnings. Let's go over to Earnings Hub, my favorite earnings site, because we can take a look at Cisco, which reports, I think it reports, let's see, Cisco. Let's type in Cisco. I can't see it. I know it's up here. I just can't find it. We'll search for Cisco. CSCO. Because then we'll go back and we'll look at the quant system. But Earnings Hub, they already reported Investor Day. Earnings tomorrow afternoon. Earnings tomorrow, I guess they have Investor Day today. But 88 cents, they're expected 85 cents. Now in pre-market, it's down 0.14%, down 6 cents. You're at 44. Their expected revenue, reported last time 12 billion. They're expected 13.54. That could be hard. This could be very hard for them to get to. But when you take a look at Cisco in the quant, it's a buy. It's a hold in the quant. And the reason is the growth. Now, this is a stock that's upper left to bottom right. This is one of those that actually built the internet, and it's the stock that everybody points to in the year 2000 where it just came crashing down. Now, the growth is horrible. Horrible. Free cash flow, 7%. It's just one of these staple companies that's horrible. Now, Wall Street has a price target. I think it's 50 or 51, somewhere in that neighborhood. Let's see. Price target is 53, 20% up. It's not crazy. The stock has been sliding down. That's the issue, is the profitability is perfect. The momentum has brought it down. Momentum will bring a stock down. When the market says, hey, it's too expensive, doesn't matter the fundamentals, doesn't matter anything, the market will bring it down. So when we take a look at this, this is an upper left to bottom right. It's not one you want to try and time. But what's interesting is the MACD is super low here. The RSI is super low. The lower expectations could provide a pop. And when you look at this weekly, we typically have come back up to the 200-day. And so you're trading under the 200. The 200-day is 50. This could be an opportunity to buy into the stock. Again, it's not one that's going to go up to 60 anytime soon. In my mind, might be worth the risk, but don't go balls deep on this one. Do not go balls deep. Thursday from Earnings Hub, we've got JD, Grab, Deere, Baba, and Walmart. Walmart's the big one. We'll take a look at Walmart because this is the one that I own. This is the one that's going to determine the consumer. Walmart expected 64 cents. We heard from Home Depot today. They had a bad earnings. They're down another 4% at pre-market, but I don't know exactly what it is now. But these are higher expectations from Walmart. Will they meet it? It's going to be an interesting one. When you look at Walmart versus Costco, Costco has been the clear winner. It's not that Walmart's doing anything bad. We'll select symbols and we'll do Costco. These are the two retailers that are in my core portfolio. Not my personal portfolio, my core portfolio. I own Walmart. I sold out of Costco. Look at Costco over 1 year, up 57%. Walmart is at 28%. It's just simple. Year to date, they're both up 30%. So they both met. Walmart came up to meet Costco. Costco is just too expensive. It's just too expensive. We can look at the peers, and I think Costco will show up. Yep. Target, which I sold out of. Let's look at the valuation of all of these. Because when you look at the valuation, Walmart's at 28. Their PE is 28. Okay? Target is 14. That's because bad management. I don't like Target. I sold out of Target. They may pop. Who knows? But Walmart is the staple. Costco is twice that price at 53. Okay? Revenue growth, Walmart 5%. Target down 2%. Costco is up 7%. That's the winner. That's why you're paying so much for Costco. Walmart, gross profit margin 24%. Costco only has a 12%. But you are paying for the growth of Costco. And I would argue Walmart is a better stock to pay for. Now, when we go in, Walmart is part of the core portfolio. And so we can take a look at the 4-hour algorithm. We can say, okay, when should I buy? Well, when you take a look at the 4-hour algorithm, it says today, 69.05. 69.05. You're trading at 68.62. The earnings are coming up. The MACD, super low. RSI coming off of oversold territory. When we look at the weekly, because remember, it's up 30% year to date. When you look at the weekly, the MACD is just crossing down. We haven't reset this stock. Okay? The RSI is at 68. So is it expensive? Absolutely. Does Home Depot give us a good look at the consumer? Yes. Is this one going to crash? I don't know. But again, that's how you look at it. We've got JD, Grab, Deere, Baba, Walmart, and then after the bell tomorrow, we have Applied Materials, which is a semiconductor name. That's an interesting one. I think Stephanie Link likes it. The one that we have on Friday is Berkshire before the bell. And Berkshire it's just one of those. It gave us a trigger yesterday, an entry in the algorithm at 434.70. The MACD below the oscillator, the RSI at 50. It hasn't been down here for a while. But again, the buy at 411, great buy. It got you out with a nice 3% gain. When you look at the weekly on this one, has this one reset? Because it's been a high flyer. I did sell all of my Oxy, all my Occidental Petroleum. And I said to myself, if I want to follow Buffett, I'm just going to buy Berkshire. I'm going to wait for the earnings to come in. I'm going to be patient. In this market, I just want to be patient. That's it. Now, Alex from Facebook, some of the social requests. Alex from Facebook had a great post about my pot trade yesterday where I talked about, hey, the taxes are crazy. The taxes are nuts. To add to your comments on dispensaries, I have a neighbor at the lake who got into the business 10 years ago. He just started making profits off the business last year. That's 10 years in the business. He has 5+ stores, and I don't know how many acres to grow the product. Also, I asked about how it is regulated and taxed. He said he is taxed at 70% because pot isn't federally legal. So I think 70% is more the fees and taxes because you have to pay, it's like 50% that you have to pay to the banks to be able to bank in the potting business and blah, blah, blah. Then he pays out his employees and other expenses. And I'm not going to lie, he's a millionaire. But what a crazy business to get into. When I asked him about stocks, he said, don't touch them until it's federally legalized. Even then, he said he'd be cautious because he wouldn't get into it. It's a tough business. And I don't think it's one that you bet on. I think there's better places in the market. So my point yesterday was, if you've got losses, don't water those weeds. It's pot. The illegal trade right now is doing way better than the legal trade. So Ryan sent me a great email yesterday. I can't tell you how helpful last week or so. I think this was a comment on Substack, actually, of your pods have been. I've raised a ton of cash, and I'm looking to rebalance my portfolio and greatly simplify it. I had too many volatile positions. I own a business and have kids, so if it gets to be too much to follow. I picked up Bluebird and some of the newest alpha picks. That is probably too new to mention. Yeah, too new to mention. Charts like a good entry on the 4-hour. Both are completely different than I would buy in my own and different from the rest of my portfolio. That's great. The volatility has me overthinking and overtrading too much. I like the idea of having a few names that they just tell me when to sell. Also, I'm planning on loading up on XLK. As you mentioned, it would be a great complement to my individual stocks that I don't want to get too outsized in, and I already have a good sized position in QQQ. Thank you for all the work that you do. This is perfect, and this is how you use the podcast. This is how you use the tool. Ryan's got kids and a family. I know when I go on the road with MLS, and I don't have time to freaking trade. I don't have time to look at the stocks. At night, when I get back to the hotel, I pull up the stock charts, and I look at the 4-hour algorithm. And then I pull up Seeking Alpha, and I see what stocks in my portfolio are doing well and which ones aren't. This is awesome. This is the way you use the newsletter and the podcast. It helps guide you in a way to manage your own personal portfolio and how to read these things. You don't have to listen every day or read every day. Just find a system that works for you. And that's the point of this entire podcast and the entire newsletter. Find a system. If I'm part of it, great. If I'm not, have at it. Again, I just want you to find something that works. So let's take a look at this one. Arisha, hi, thank you for all you do. I'm an everyday listener. Could you look at McDonald's? Yeah. McDonald's, KFC expanding its $5 value meal to take on McDonald's in price war. That's not great. Again, a price war at low margins doesn't seem good. And McDonald's was the first one to warn about the weakening consumer with the $5 meal. So we can take a look at it. It had a nice pullback. The algorithm loses you 0.6%. I mean, it's even. You make 3% over 24 months. So in my mind, not particularly a stock that I'm super, super bullish on. But again, if that fork in the road that we talked about at the beginning of this podcast, if that fork in the road leads you to we're in a good economy and they're lowering rates, McDonald's might be one that you could get into because this 50-day looks like it's crossing up on the 200. Would I get into it here? No. Now, you've got to find a system that works. It's clear. With losing 0.6% over 24 months, I don't think that the 4-hour algorithm works. So let's try another strategy. Let's see if maybe the 65-minute algorithm works. It does. Okay, I didn't know this before I went into it, but you've got to find strategies that work on these stocks. Again, charts don't care and they have no emotion. So if you just bought this 8 months ago, you're down 7.4%. Okay, if you buy this with using this 65-minute algorithm, and people will say, why 65-minute? Well, when you split the trading day up into perfect increments, it's 7 candles. 65 minutes. You get 7 candles a day. Okay. And this algorithm trades on moving averages. So when you use this over 8 months, you have 88 positions. So it's about 10 trades per month. Is that too much for you to take? Maybe. Maybe you don't take every trade. Maybe you just use this algorithm to say, okay, I want to buy here. 269.49. It's above the 9-day. You have confirmation. 50-day still moving positive. You're above that. Every time we've gone from below the 50-day to above the 50-day, it's continued higher for a good amount of time. Not tremendously, but I do see those peaks and valleys. So MACD, super low. RSI at 51. We can take a look at McDonald's here in the Seeking Alpha, and we can take a look at this to see where McDonald's is. McDonald's is holding the quant. And why? Well, it's just the valuation growth and the momentum. And the revisions are F. So I don't think that this is a buy and hold. Again, earnings per share revisions, nobody's up. 30 people are down. Revenue, one person's up. 27 down. And this isn't one that's not covered. When you go to Wall Street and you look, the price target on this one is 294. That's 10% upside. 36 analysts have covered in the last 90 days. Okay. But that price target is coming down. At some point, they meet. But look at the last 5 years. You haven't had a very good, you've always been too bullish on this stock. And so I'd be worried about this one just underperforming. I would trade it on the 65-minute. I wouldn't own this one. It's not a great one. But again, you have to find the strategies that work for these stocks. Amer, he asked me, solid numbers from Anon today. Thoughts on where we go from here? So let's look at Anon, because Anon is a shoe company. I tried their shoes. I have wide feet. Even their wide thing, the toe box was the problem. So I had a problem with their shoes, but they are the fastest growing shoe company out there. The valuation is crazy. I will tell you, the valuation is crazy. Again, the 4-hour algorithm doesn't work on this one. When you buy and hold, you've made 83% over 24 months. You're just making even using the algorithm. It's 34 positions over 24 months. And the weekly will kind of tell you why. We don't have a 200-day. It's still new. It's still new. This is still a very brand new stock. So yes, the 50-day is the longest trend line that we have. It is up. It is going positive. When you look at this 4-hour algorithm, I have said before that $35 is the resistance level. Now, I would say that moves up to 40 since the last time we had earnings, which was back in May, it shot to 40. And it is held up around there for the entire quarter. Now, where are we today? We're at 39.66. The earnings did nothing to this stock. The earnings did nothing. The valuation is a little nuts on this one. If we go to Anon and we look at this, you can do DEC, you can do shoe companies, you can do Nike, you can do all that stuff. I don't think with a weak consumer that this is something that you want to look at. Now, in pre-market, it says 41 here. I don't know why there's a price difference between Seeking Alpha and Trendspider, but there is. See whatever price. Yeah, it's not. Let's see, 41. But Seeking Alpha is 39. Or I'm sorry, Trendspider is 39. So I'm not sure exactly which one it is. Maybe Seeking Alpha has a bit of a delay. But you get that. That was 41 yesterday. I think that's, yeah. There we go. Now it's updated. The valuation of this one's nuts. And that's the only thing that's wrong with it. I mean, the valuation is crazy. They're not making money. The forward PE is 39. The sector's at 14. It's ranked 3 out of 9 in footwear. The PEG ratio, though, as long as they continue to grow, that's where the value in the stock is. 33% revenue year over year. They don't have free cash flow, so they're not making money. Their profitability is good. They will make money at some point. They have a 59% profit margin. It's ranked 3 of 9. What's number 1? Skechers. Skechers just looks cheaper probably. And you know, I wear Skechers. I'm an old dude. I wear Skechers. It's a strong buy from Wall Street. They're up 2% today. Let's see. Up 29%. Average price target is 81. Skechers has about the same kind of thing. Now, there's only 16 analysts that cover it. It's a quant, a buy, not a strong buy. It's come down from 64. But when you look at Skechers, it just has a better profile when you look at these 5-factor grades. So I don't exactly know where it's going. Nobody can tell you where it's going. But in my mind, Anon's not a bad one. You're just going to have to put up with some volatility. And it's going to, you know, you could go down to 30. Again, that fork in the road. If we got a weak consumer, they're not paying $200 for freaking Anon sneakers. You know, they're going to mark down to Nike. They're going to take the lesser of that evil. Now, your strong consumer is going to be there. It's going to be fine. Now, let's talk about scans. What I do every morning and what I include in the newsletter are these stocks, and they're scans. It's a 4-hour algorithm, and I tell you which stocks today have an entry in the 4-hour algorithm, and it's down here at the bottom of the newsletter every day. So say you're just looking for some ideas. Just scroll to the bottom of the newsletter. You have to be subscribed, but just scroll to it. We've got a few that are pretty highly volatile names. Now, SMCI. I sold this one last week on Friday. Why? I didn't think it had, I thought it had more downside. 541 algorithm. I'll buy more. It's a 563 right now. Have we come down enough? Well, maybe. Very likely, maybe. You can see that the top of this is 410. Are we going down there? I don't know. All they announced was that their margins were less. That's all they announced. The entire business, the go forward plan, huge. This one's up enormously since it bottomed out under 500. If you bought this, under 500 like 2 days ago, you're up 10%. It's a great plot. XLY. I got rid of this one. Tesla's up 1.5%, hovering around 1%. This is Amazon and Tesla. That's what this is. And XLY is up 1%. I got rid of it. Why did I get rid of it? Because of its year-to-date performance. I'm moving to XLK. I'm moving to Berkshire. I'm moving to others. I'm moving to NVIDIA. That's where I want it. I don't want it in XLY. I made the determination, again, that fork in the road, that they are cutting rates. It's emergency rate cut that they're talking about, and they want that. I don't think that's going to happen. I think Powell is definitely more patient than that. But that fork in the road is, are we lowering rates because of a weak consumer, or are we lowering rates into a good economy? I think both can be true. But the reality is, I'm just going to sit there in cash. Maybe I buy 2-year bonds because they're going to lower rates and I can get 4% risk-free, tax-free. Maybe that's the play. Tesla had a cross up here at about 200. Is this one you want to get into? I don't think so. Again, the valuation's nuts. 197 was the buy-in. The valuation's crazy. The 50 days moving negative. But this range between 140 and 263, is it crazy to think that you could get back up to 263 at some point? No. 200 days turned positive. Now, this one soared into that robo-taxi announcement and after the earnings. It soared. Since May, this was trading at 170, and in July, it got up to 260. I sold it 255. I saw the downside. You see it. It didn't hold that 200-day, and it can't hold the 200-day on the weekly unless it's got some type of catalyst. And Elon's just not, his word isn't what the street's not saying, oh, Elon's a genius. He's going to do it again. They're kind of a little skeptical. So you've got a bunch of Bitcoin, a bunch of energy, a bunch of leveraged ETFs, including CONL, which is Coinbase double times leverage, 2 times daily leverage on Coinbase. Is Bitcoin coming back? We don't have a long term on this. You don't want to buy and hold this one, but it got you 31.83%. The 4-hour algorithm makes you 291% over 27 positions. So just about once a month. If you bought and held this one, you've made 34%. These are daily leveraged ETFs. You can trade it on the 4-hour. If you think that Bitcoin is going down, I would add Coinbase. If you're going to buy this, I would add Coinbase and CONL just to double leverage your buy on this one. And don't hold this one more than a couple of days. If you're up 10% on this one's up 2% in the market right now. If you're up 10% on this one, cut your ties. Buy it back the next day. You're going to always buy into an uptrend on this. Like during this entire time, back here from February, where you made 195% on this name, 242% in 45 days. You could have gotten out and gotten back in, traded on a shorter time frame. Even though the 4-hour tells you to be in it, you can do that and then trade it on a shorter time frame. So again, use the tools that you have. Now let's talk about other things on Linktree. You've got the Substack right there. You've got a way to pay me if you made any money. Tip me like a bartender. You got the YouTube. You got X or Twitter, Voz, Vase, whichever one you want. Spotify, Apple Podcasts, Facebook group, Instagram, Twitch, which I'm never on. Threads. You got there. You can email me. Either one. But you've also got ways to support me, okay? Webull. This is my sports trading. You can get 75 free stocks when you sign up. This is my sports betting. We're getting into NFL season. I used to spend $500 a year on sports betting. Now I just put $500 into Webull and I can grow it. It's up to like $7,000. A couple of years ago I put $1,000 into there. So I like this one. I love the Webull app. I love using it. It took the place of my sports betting. Now, if you want to support me and you're looking for a new phone service, Visible. They're the sponsor of the podcast. $20 off your first month. Just use the link. Now, I'm talking to you on AT&T Wireless. Not AT&T Wireless, but AT&T Fiber. 1 gig service. I love it. It's cheaper than cable for me to have AT&T Fiber. Honest to God. The cable service is actually charging me more, and it's giving me less speed. So review what you have. Savvy Trader, you can follow my trades. And then I've got the personal Venmo, PayPal, or Cash App, whatever you want. So if you want to support the podcast, Linktree is there. I need to start an Amazon store as well, so that when you degenerates buy from Amazon, I can get a commission on there. If you have any questions, hit me up. Okay, talk to you guys tomorrow. See you, bye. I think I covered everything. Yeah. Whoo! Wow, I'm underperforming the market. God, NASDAQ is up 1.34. Whoo! I'm underperforming, though. Probably because I'm in so much freaking cash. Okay, let me look at your comments. Boom, 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 boom. Let's see. Man, you guys had a lot of comments. Dear buy under 400. Yeah, I'd agree with that one. Morning, Steph. Morning, Alexander. I looked at that one. Baba looks good. Or yeah, don't get sucked into Baba. I'd rather see you miss out on the first 20% than to lose the next 20%. Yeah, Chris has the right. Morning, Jay Delac. Larry. Thanks, Brandon. I appreciate it. Alexander Herbert, Amazon testing my patience. Who cares? Alexander, who cares? This isn't the stock that you're, it's going to retest this gap up to 182. But long term, I mean, there's nothing that's pushing Amazon higher. They're going to report Prime Day out here in September, October 21st. You're going to see, the rate cuts will be fine. Amazon's fine. Yeah, Chris should have his own. Chris, about the Harris Biden or Harris Waltz administration. I don't think a president can stop a good economy, and I think we have a good economy. I mean, I don't think the president determines a good or bad economy. I think spending, I always liken it to the Republicans have traditionally always liked to spend less, but the Democrats like to spur growth by spending. The Republicans like to have private sector growth versus government growth. So it's just a difference. Yeah, my girlfriend told me this is my entire social interaction as well. I think yeah. Alexander, you'll get there. If you've got an eye on retirement early, I mean, I'm helping a friend out who's kind of late to the game in saving for retirement, and so I'm trying to tell her you got to take risks. You've got to take more risk than you're comfortable with. You're gonna lose sleep, but if the guiding principle is that you retire at 65, you've got to take risk. If you're a professor and you're younger than 40, take a bunch of risk. As you get to 40, take a little bit more risk off. And I don't consider, again, we're all different risk tolerance, so it's all personal. But I don't consider my Apple position a risk. I just don't. I don't consider Amazon a risk. I just don't. I mean, I lived through this Amazon downturn of 2022 with it being a top 5% in my portfolio. I didn't trade in and out of it. I bought more. But I didn't trade in and out of it. I just bought more. So as long as you have the stuff, and yeah, Chris, I graduated high school in 1988. We've had the benefit of an extreme bull market. I mean, there have been 3 times. I got questioned the other day by a longtime friend. Has there ever been a time when you were afraid? My first market downturn in the dot bomb of 2000, yes, I was afraid. I didn't have, compared to today, I didn't have a ton of money, but it felt like a ton of money, and I lost 40% of it, and I was positioned wrong. Learning experience, rebalanced, went back into it. 2008, housing crisis, same thing, lost about 50% of my net worth. I had a job, so I had a house, I was pretty comfortable, but still didn't feel very comfortable at all. They were laying off people at my job that I had just switched to. Got kind of scared then, but I took it, rebalanced, everything worked out. 2020, quit my job, retired in January 2020, lost 40% of my portfolio with COVID, and then wound up, rebalancing and getting into the right stuff and doing it. So I look at those big kind of downturns as opportunities today because I've been through 3 of them. But that first one, man, that's scary as fuck. Should Dell replace Boeing in the core portfolio? Yes and no. And the reason I say yes is because Dell versus Boeing, I mean, it's clear. Dell has just outperformed Boeing. And this dip in Dell, I consider, a buying opportunity. The problem is when Boeing actually starts delivering planes and stuff, Boeing's going to outperform Dell. And I think with the new CEO and I think once they start righting this ship, this is an enormous company. And you can see right here, I put that 180 in there. We're at 164. We've broken through that a couple of times, right here and weekly, the past couple of weeks we've been there. If we break down that, the only other the support is 119 right there. I mean, that's the only other support on a long-term chart. That's it. So I've been kind of, okay, if we are going to go down to this 119 level, which I can't believe because again, it just makes too much money. So and I've got a lot of tech in the core portfolio, which is heavily weighted towards that heavy tech. And that's why I don't want to take Boeing out, because it's an industrial. It's really one of the only industrials in there. So, Andres, would you recommend NVIDIA or buy an ETF with NVIDIA in it? Whatever your risk profile is. Your risk is different than mine. If you're going to buy NVIDIA, you're going to have to deal with the volatility. If you're going to buy an ETF, you're going to be a little bit protected from the volatility. Bank of America versus Citigroup. I own Bank of America. I think they are at least a $40 stock. I think Citigroup in the long term comes back up to that 80 mark because their book value is 99. So that's my take on it. What do you think about Cat? I like Cat. I like it, but I think, how many times are you going to upgrade your tractor and sell equipment? The infrastructure, the Infrastructure Inflation Reduction Act, which is heavy infrastructure spending, hasn't really been out there enough to push this one up. You're seeing it's kind of sideways. Now, the question is, with this sideways and the Bollinger Bands coming together, where are you going? It's right on that line. The MACD, low. The last time this was down here, you were at, 229? And it shot up there? So I don't consider you trading Cat. I consider this one a buy if you're comfortable with the valuation and then the lack of growth. I'm not super bullish on it. Wall Street at 336, the price target is 352. That's a 4% upside. There's better places to put your money in the market, in my mind. Chris, I wasn't as experienced as I am now and didn't have the looking back at, oh my God, there's time to recover. I just looked at, to be honest with you, oh shit, I lost 40%. And yeah, that's what you have to worry about with Cat and stuff like that is we're 4 years outside the pandemic where they had pricing issues and upgrade issues. I think it's Deere has the best agriculture, like full self-driving kind of stuff, technology. And they have a proprietary tractor where you can't go somewhere else to get support or get it fixed or something like that. So, I don't know. I'm not great on that sector, but in my mind, again, I kind of think of it, you got better places to put your money. Okay, with that, I'm out of here. I got to get ready for my housekeeper. I clean up before she comes. Because I don't like to, look at this. What's NVIDIA up? Another 4%. Wow. Palantir's up 4% to 30. Wow. Roblox, that'll go back to 40. If you want to buy at 38, it's going to go back to 40. Shopify's up 1.24%. I sold out of that one too early. Should have seen that one kind of rising. SMCI, I'm upset that I sold it. Not upset because I still own it. So I still am in that one. Tesla, I have exposure in my brokerage account, but not in my retirement account because I sold out of XLY. Yeah, I'm up 1.37%. So it's a good day. It's a solid, close to six-figure day. So, okay, I'm out of here. You guys have a great day. I'll see you.